Hey traders, Raghee here, and in this recap video we're going to talk about price movement ranges and how they were absolutely vital to keeping us from getting run over by the midday to late day turnaround. So we'll start with the ES and then we'll go to the YM. So first of all, starting off this morning, our 5-dot criteria was met. Our green grab candle criteria was met. So I was looking to buy. I was looking to the long side. And that is what the clarity of this time frame showed us. So the goal was to wait for an exhaustive move to the downside, which would land me in the wave, which is the 34 EMA high, the 34 EMA close, and the 34 EMA low. And as long as we stay above that low, the bottom line or the red line of the wave, the trade is valid. Now, in order to gauge how much we could move, I'll utilize the tool of the volatility analysis of AutoChartist. And I know that between 9 and about 11 o'clock, it's not going to be surprising to see ranges from about 8 points per hour to upwards of 12 to almost 14. So that's the range that we could be trading within, 8 to 14 points. So each hour, I should be asking myself, what would it mean if we sell off by 8 to 14 points? And what would it mean if we rally by 8 to 14 points? And would that lead me to a profit target? And can price action maintain the uptrend and still move 8 to 14 points? So we got our entry, which was the zone between 2661 and 2659. And actually, let me double check on the notes. So here we go, 2662 to 2659. This is a 60-minute ES buy. We did something similar on the Dow, 24,220 to 24,225. So you can go check out what that looked like shortly after the Wall Street bell rang. So then we rallied up after that pullback to a high of, at that point, let's see. Okay, I don't need this drawing tool to be drawing all over the place. Let's try to undo this, shall we? All right, here we go. So we went up to a high of 2675.5. Now, generally as a rule of thumb, I got it at 62 to 75. Well, if you get in from 62 to 75 and you're looking for 8 to 14 points, and you're right about, at this point with 75, you're right about 12, 13 points. At that point, you've started to close in on that hourly price movement range to the upside, to the profit side. The other thing that was looming over was the fact that we had the 2680 level overhead. Now, let me give you a quick rule of thumb for minor psychological levels and major psychological levels. And here it is. If you have a psychological level, meaning a number that ends in 00, 20, 50, or 80, in this case 2680. Step out in front of that by 3 points. That's typically my rule of thumb. I will step out in front of that by 3 points. If it's a major psychological level, 00 or 50, I'll step out in front of it by 5 points. Now you can apply 5 points to everything. You can apply 3 points to everything, but I have found by and large, 3 points typically suffices for minors, and majors 5 is best. Now, if you're watching this market pretty closely, we finally topped out at 2676. We fell 1 point shy. Now, my 2675 folks, no problem. My 2677 folks, you've got to pay attention to these things. It did fall. It did roll over quite swiftly. And it just kills me that we fell short by that 1 point. So, truth in advertising here, we had to manage this on our own. This was one of those trades that we couldn't just set it and forget it. The Dow was that way, and I'll show you that in just a moment. So we had the price movement range behind us of that 8 to 14 points. This was about 12. We fell 1 point shy of 77. I mean, everything here says, look, this trade is a winner. Take something off the table. The resistance in front of the minor psychological level just came in early. All right, let me show you the YM. And there are price movement ranges associated with this as well. So I'm going to be somewhere in the 80 to 130 area. And we had, as I showed you before, the 24,220 level, which was down at about here, right at the 34 EMA, pull back easily during the clearing, and then we started to move up higher off that 220, 225 area right there, really where the 21 EMA was. And then from there, we went to 24,400 and beyond. But at that point, if you add on 100 pips, or a point, sorry, or even 130, you're at, so from the 24,220, you add the 130 pips, right there, you're actually, and that's the extreme, right? If you just add 100 pips, you're at 320. You add the 150, you're at 370, and this exceeded that by another 20. So you know this market's moved quite a bit for you, not because it's dollars or percents, but because it's the rhythm of the market, that price movement rhythm. And then also, what else do we come face to face with? 24,400, a double zero. So we step out in front of that by 5 points, giving us a 24,395 exit, which was an alert I sent out. So we also had one other thing working for us, the DARVIS, the automated support and resistance level that we use day in and day out. So why and how am I saying that this is such a good level? We had DARVIS, we had a major psychological level, and we moved the hourly price movement range. And that hourly price movement range should be something you have in the back of your mind as an intraday trader, even a slightly longer term time frame like this, because it keeps you from pushing the trade past what it can normally yield. So I hope this has been a little longer recap. I hope it's been really helpful. It made all the difference really between taking a nice little profit on the morning strength and getting caught up in the last 3-4 hours of the day where the market really rolled over very swiftly.